Hey guys, this is episode number 26 of David Coleman Daily Thoughts, or Daily Thoughts with David Coleman. Today we're talking about crypto and the financial markets as we go into this very, very weird part of the last part of Q1. Today is March 7th, I believe, March 7th. So we had a very interesting event happen earlier this week when it came to Bitcoin and all of the altcoins that are very closely tied to Bitcoin. The Bitcoin price dove about, about $1,000, $1,200 in about 60 minutes last week. I think it was either Friday or Saturday. It just took a dive out of nowhere. And that was because a lot of short sellers, a lot of their orders were liquidated essentially. And there was also some news about Silvergate, which is a bank that deals almost exclusively with cryptocurrencies, and it's called the crypto bank because a lot of the larger institutions, I believe Coinbase is in there, MicroStrategy, Michael Taylor's MicroStrategy is in there also. They bank through this Bitcoin bank, or this crypto bank. It was basically, they were taking a look at their books and trying to figure out if they were even solvent anymore. And that's a big deal, especially in the crypto space, because if you don't have as we know through FTX, and other organizations that like that who have gone bankrupt here recently with the dip in cryptocurrency. FTX is the biggest one by far, not even close. If you're having a hard time figuring out if you're even solvent anymore, and customers get scared. Customers get scared. People who are holding their money in Bitcoin, people are holding their money in stable coins and altcoins and all that kind of stuff. They get scared and they want to pull their money out immediately. And so a lot of these people will pull their money out, and sometimes, hopefully, the bank has enough on hand in order to take those kind of funds out. Sometimes they don't, and in this case, Silvergate is trying to figure that out. So a lot of companies have come out here to distance themselves away from Silvergate, try to get away from that toxic dumpster fire that's happening over there. And so we'll see what happens with that. But Bitcoin did take a massive dive there, and is still, I don't think it's really recovered. It's right now, it's kind of ranging at the moment about 22,000, just above 22,000. And I've seen a lot of analysis all day long and yesterday and over the weekend about what Bitcoin's doing. Some people are saying it's going to 10K. Some people are saying it's going to 16K, 18K. The gig is up. It's going to zero. I don't think it's going to zero. I don't think it's going to be, if it goes past 20K, I wouldn't be surprised. That's what I'll say right now. Goes lower than 20K is what I'm trying to say. And the reason being is that the liquidity in the market is starting to dry up. You can see that the way that people are trading Bitcoin, you can look at the volume curves, you can look at all that kind of stuff on any kind of chart platform. The volume is going down quickly. And I don't know if we've bottomed out yet. I think there was quite a bottoming out there for a little while, and then it started going back up. But at the same time, you never know. It could be a false bottom and then we go all the way down to zero. Who the hell knows? Who knows? But I think the biggest thing that we need to take away from this is that the crypto market is on shaky ground right now, and so is the stock market. The stock market, it's been hovering around 4,000 for the S&P, I think 32.5 for the Dow. And we're going to get some numbers here in the coming weeks, including CPI, which is the Consumer Price Index. A lot of you are probably familiar with that. And we'll get some more inflation numbers that's going to address, or at least give us kind of a framework of what kind of economy we're working in right now. Mr. Powell from the Fed came on today, did a speech talking about basically his essential message that he was trying to get across was that the rate hikes that we've had in the past, which have been about 50 basis points or 0.5% almost every single time until the last time where we had a 0.25%, 25 basis points rate hike. He was basically saying that we may have, by loosening up those rate hikes, actually allowed inflation to start to increase again. We had a really hot CPI last time of 6.4%. Before that, I think it was 6.1 or 6.2%. So inflation has actually started to tick up a little bit more still. And I've seen some recent numbers here from the used car market, where the used car market went up like 6 or 7% in February alone. So I would not be super surprised if we see another hot CPI print. And that would be really, really scary for people who are in the financial markets and the housing markets especially. The reason I say that is because we will probably get 50 basis points with the next rate hike. That would not surprise me whatsoever. And that would mean that, our prime rate is at, what is that, we're at 4.5, 4.75 now. We'd be up to 5% plus, right? And then the Fed Powell, Mr. Powell, said that there would probably be more rate hikes and at a continued rate for longer. So we're probably looking at Fed rate hikes for the rest of the year, at least through Q3, I would say. And that's going to affect the housing market. That's going to affect cars. That's going to affect any kind of lending, credit cards. It's going to affect it's going to affect any kind of lending out there, period. So the housing market is already having a really tough time. There are a whole bunch of reports and charts out there where the housing market is already at its most unaffordable point in 20, 28 years, whatever. So people who are buying homes are not buying homes. People who are selling homes are not able to sell their homes. And we're getting into a space here where we are not able to purchase things with credit. And that means that the entire economy of what's being produced, what is being sold, the banks, all of those are going to start to become into a very, very dangerous spot in the market. If you can't build new houses for people, if you can't sell those new houses when you build them, and then if you can't, same thing with cars, if you can't build them and then sell them, you're going to have a serious problem keeping people employed. The automakers are going to start laying off like no other. We saw, this is not in the auto market, but in Facebook announced they're going to be releasing another couple thousand people off of their books. You're going to see job layoffs starting very, very soon here. The CPI, I think, is going to launch another wave of layoffs for a lot of people. The housing market's going to get hit really hard. If we're at 5%, which means, loans for houses are going to be much higher than that, 7% plus. It's going to be a very, very hard time for people to buy homes. And that's also going to be difficult for the housing market when it comes to builders, because no one's going to want to build houses if you can't buy them, and vice versa. If you can't have new houses for the realtors to sell, then the realtors are out of job also. So this is going to be a very, very interesting and difficult time period, I would say, over the next 6 months plus for all different kinds of industries until we see a loosening. Well, first we have to have inflation come down, which, I'm really hoping that starts to happen at some point soon, where we make a really serious cut into this inflation, because as of right now, it's starting to creep back up. So that's where we're at right there with the financial market when it comes to crypto and stocks. Real estate's in the same boat when it comes to investment. It's a very, very difficult place to be. And so we'll see what happens. That's it for me today, guys. Make sure you follow my Rumble, which is David Coleman 27. Make sure you follow the Instagram, which is David Coleman YT, and the Twitter, which is Colma63ETH, where I talk a lot about financial markets, crypto, stocks, and beyond. So thank you guys so much. Make sure you like and subscribe to this page. We are continuing to grow. We're going to be back on our daily videos, just not talking about the stuff that YouTube doesn't want us to talk about, and that's totally fine. We'll talk about other cool stuff. So thanks so much, and we will see you on the next one.